hope that tax saving is out of question as your income is more than rupees 15 lakhs? Then let me tell you that even when you earn a higher salary, it is possible to bring your income tax liability to nil. Hello and welcome. I'm Jyoti Arora, a tax expert at Clear. We are India's largest tax and financial services platform, and we have served more than 6 million plus return filers. Before we proceed, please subscribe to our channel and claim a free giveaway. You will find the link in the description box below. In this video, we are going to tell you, in fact, show you through a live demo how you can pay zero or minimum tax even if your income is rupees 15 lakhs. So let's get started. Suppose you have a salary income of rupees 15 lakhs with a breakup of salary as basic pay, HRA and LTA component as below. Now let us see through a live demo what all deductions and exemptions you can avail. But if you have any questions in between, then do feel free to ask us in the comment section below and we'll reply it as soon as possible. So let's begin. Log into ClearTax e-filing portal. You can log in through your Gmail account directly. The screen will give you an option to either upload Form 16 or manually fill in the details. If you have Form 16, then this option will auto-populate all the Form 16 details and your return filing will become extremely simplified. For this video, we will manually fill in the details to understand all the deductions that will help to bring down the tax liability to zero. So let's begin. In the first personal info tab, please fill in your personal details like name, date of birth, and click on save. Next, enter your address details and click on save. Under the salary head, under this tab income sources, please scroll down and enter details of basic salary. Also add the breakup of salary like house rent allowance and LTA, that is leave travel allowance. Next, you will have to add the amount of HRA exemption and LTA exemption. HRA exemption can be calculated by using Clear's HRA exemption calculator. You just have to input few details and the calculator will give you the exempt as well as the taxable amount. Also, LTA exemption is allowed on the basis of the actual domestic travel carried on by the employee. However, for financial year 2021, the government has allowed to take LTA cash voucher scheme exemption in lieu of LTA exemption. To understand about the scheme and understand how this exemption can be claimed, please find the link in the description box below. Next, please add standard deduction of 50,000 which is allowed under section 16. Also, professional tax deduction is allowed to the salaried employer at rupees 2400. Click on save and proceed. Now, under house property head, please scroll down and select self-occupied house property from the drop down. We are going to claim the interest paid on the house property loan. Please remember that maximum deduction that is allowed under this section, which is section 24, is rupees 2 lakhs. So even if you have paid interest of more than 2 lakhs, maximum deduction will be allowed is of rupees 2 lakhs. Next, you can go down and enter the details of the house property. If it is same as mentioned in the personal info tab, you can just select on the tick box. Next, go and add the co-owner details and click on save. Now we will enter deductions from the deductions tab. Now we will add ATC deduction first. As you all know that a deduction up to rupees 1,50,000 is allowed under this section. There are various instruments under which you can invest to claim deduction under this section. For example, any contributions to LIC, that is Life Insurance Commission, Public Provident Fund, Employees Provident Fund, National Savings Certificate, ELSS mutual funds, children's tuition fees, or repayment of principal amount in housing loan can be claimed under this section. Then scroll down to claim deduction under section 80G for donations made to charitable organizations. Click on Add Donation. A drop down list will appear on the top. You can select any fund or organization appearing from this drop down if you have made donation to these. However, you can also add the details of the trust or the fund if their name is not appearing in the drop down. Make sure that such trust or fund holds a valid ATG certificate before you claim this deduction. We will select a fund from this drop down, and you can see that directly all other relevant details like PAN, limit on deduction, qualifying percentage, address and PIN code automatically gets populated. All you will have to add is amount and click on save to proceed. Now we will add deduction under section 80D for medical insurance premium paid. Now, any medical insurance premium paid for self, spouse, or family can be claimed up to rupees 25,000. A separate deduction of rupees 25,000 can be claimed for parents which are below 60 years of age. However, if your parents are above 60 years, then the limit increases to rupees 50,000. Next, we will claim deduction under section 80E, that is education loan on higher studies. Now remember that only the interest component paid on education loan for higher studies taken for self, spouse, or children is allowed under this section. There is no cap limit to claim deduction under this section. Scroll down to claim deduction under section 80 CCD1, 1B, and 2. It should be noted that a separate 50,000 deduction is available if you invest in NPS under section 80 CCD1B. This is over and above the deduction of 1.5 lakhs allowed under section 80C. We will claim this deduction, and also a deduction under section 80 CCD2 is allowed up to 10% of the salary towards employees' contribution in national pension scheme. Click on save and proceed. Under other deductions, you will find two sections, section 80DD and section 80U. 80DD is to claim deduction if you have any disabled dependent, and section 80U is for disability itself for the taxpayer. Now, you should know that these deductions are available at a flat amount. For claiming this deduction, you have to produce a certificate from a recognized doctor. If the dependent is having a disability of 40% up to 80%, then a flat deduction of 75,000 is allowed. Whereas if the disability is severe, then a deduction of rupees 1,25,000 is allowed. To claim this deduction, you just have to click on either of the two options, and the Clears portal will automatically add the amount while calculating your final tax liability. Now click on Go to Next. We have added all the deductions that were to be claimed. Let's see our tax computation. Now, as you can see, there is zero tax liability as we have covered most of the deductions that can be claimed. Clear's e-filing portal will also give you an option to compare and switch between the regimes. As you can see here, old regime gives you the highest benefit with zero tax liability, whereas under new regime, a tax liability of rupees 1,97,000 arises. Also, you can click on the report to see the ITR, and the list of deductions claimed by you will be reflected here. That was all about how you can save taxes. If not for this year, then at least you can plan your expenditures and investments for the next year in advance so that it minimizes your tax outflow. Thank you for watching this video. We have tried to show you what all exemptions and deductions can be claimed to reduce your tax liability even if you have a higher salary. Please click on like and share if you have learned something from this video. Also, if you have any questions, then please ask us in the comment section below. Do not forget to subscribe to our channel and claim a free giveaway. Link is in the description box. Stay tuned to be updated with us. Thank you. Bye-bye.